Hi everyone, Aussie Dollar Man here, and welcome to the Forex Form Guide, where we take a look at the major currency pairs through the lens of WD Gann analysis. If you're new to the channel, welcome. I'd invite you to subscribe. Also, I've put together a playlist of my videos that I think will give you the biggest bang for your buck on your Gann trading journey. There's a mix of videos here. This is a trade that returned 16 to 1 in 2.5 days. This is the recommended reading list that I have for Gann researchers that will cut down your Gann research from potentially hundreds of books down to about 20. The tunnel through the air forward there. I've recorded the Ticker and Investment Digest article, which contains a lot of information on Gann's law of vibration, and of course, Gann's never failing rules for trading, and 7 things I check before every trade. And if you find value in the videos, please consider clicking the like button and leaving a comment. It does help the channel and get the video out to more people. In this episode, we're going to be taking a look at the usual suspects: the Aussie dollar, US dollar, pound US dollar, euro US dollar, and of course the US dollar, Japanese yen. A quick disclaimer: this video is for educational and informational purposes only and should not be considered as financial investment or trading advice. Bottom line, do your own research. This is not financial advice. Trade responsibly. So we'll kick it off with the Aussie dollar US dollar pair. If you're looking for a point of reference from Gann's original work, you can check out the Wall Street Stock Selector, page 46, that Gann lined up his charts side by side. He's got a yearly, a monthly, a weekly, and a daily. We're going to be looking at the monthly, the weekly, the daily, and the 4-hour chart, because markets have sped up a little bit since Gann's time, but they do still work the same way. As we look at the Australian dollar, if you haven't already seen it, I have put out my Aussie dollar US dollar forecast for May 2025. You'll see some dates in there that I will be referencing in this video. You can check that out on the channel. So here's the Aussie dollar charts. Looking at the monthly chart over here, you can see a very strong month of April, where we did run down into our 9 April low, and we've had a very strong run up since then. We recovered the 62.5% retracement of our 2020 to 2021 range, and we're just hovering around there at the moment. However, if you look across to the weekly chart over here, you can see this has all been one weekly swing up. So generally speaking, a monthly swing is going to be made up of at least 2, if not 3 or 4 weekly swings. So we're still in that first weekly range out there. Worst case scenario, I would suspect we're going to have a pullback and then a little bit more upside at least. But bottom line, I think that we're going higher from here. And I've got a chart on the next slide to show you that. When we're coming up from a low or coming down from a top, I always like to run a ranges resistance card over there. These are taken from Gann's book, How to Make Profits in Commodities. But as the market has gone higher from that low, I've just kept lifting that ranges resistance card up higher and higher to the high of the swing. You can see here this week we had a high on Tuesday the 29th of April. We only ran down for a couple of days from there. It was an okay looking double top setup there. I did a video on that earlier in the week, but you can see the whole way down the market struggled. Here on the 4-hour chart, there's the double top, and the market ran down and then it failed to repeat its range down there. Did the same thing on the hourly chart. Markets do have a fractal element to them. It had a run down and then it really struggled to go any further. It was a little bit of a death by 1,000 cuts for those who were in short. You just had that sense that it was going to fail, and it did fail this week, and it has turned around and shot up. Technically, the low was there on the 30th of April, but in terms of cycle work, I had the 29th for a high, I had the 2nd for a low, and the 2nd was Friday's bar there, and that's where the market has accelerated from, where it's taken off from. So I'm happy with that. You can check out the rest of the dates in that forecast video that I did. Now, before we move on to the pound, just a couple of interesting charts here that I think you might get some value out of. Firstly, as we look at our big run up from that 9th of April low, and you can see we're in a pretty big updraft there in terms of the market. It's run up over 500 points in the month. And the reason for that is simple. The major cycles on this market were pointing up during this month. So no surprise that we've seen a massive up move there. But if we look at the size of this range here, compared to this previous swing here out of our February low, we're approaching that 200% milestone of 65.55, which would be what Gann calls an overbalance in price if we do run double that previous range there. So that's a good little target area to be watching on this market. And it wouldn't surprise me if we see that level hit and maybe even exceeded by the middle of May, where I'm expecting a decent top on this market. The second chart over here on the right is using a Gann fan on a daily chart. This is a Gann fan in TradingView on the TradingView platform. And I've run it from the high of September last year. And I've run it down on what you might call the initial impulse on the daily chart. So we had a big top. We've got a daily downswing, inside bar, down, 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 down. And that's where we had our first up bar there. That's an important area to watch, that initial impulse. Gann talks about it in that Ticker Investment Digest article. But have a look at the subsequent angles from there. Now, this is not 1 point per day or 2 points per day like a traditional Gann angle. It's using the pitch that the market has given you. But have a look at the 1 by 2. It called this low over here. The 1x3 called a little high bottom here. The 1x4 stopped the market there in January. And then, of course, the little higher bottom there. And the 1x8 actually called our 9 April low on the market. Not a bad set of angles there for what looks like a little innocuous low there. But the all-important angle here is this 1x8. In my experience, this 1x8 angle, once the market breaks above there, it usually takes out that top, or in a bear market, you would reverse that. So what that says to me is the Aussie dollar has a lot more upside in it. We are only just getting started in this bullish run. All right, let's move on now to the British pound US dollar. The first thing that might grab your attention here are these potential double tops on the pound, and I've got an interesting chart to show you up next. But looking at these, I see that as a very strong up move over here. That's backed up here on the weekly chart. Having said that, we do have multiple sections running out here on this monthly chart. So could we have a double top and a pullback? Yes, we could. I don't think that that's the case, but I could be wrong. As I said, I think the Aussie dollar has more upside. I think the pound and the euro also have more upside as well. At some point, as I said in last week's episode, I do think that we'll see a little bit of a pullback from these levels, whether it's here or whether it goes a little bit higher and then has that pullback first. And if and when that happens, you're going to see that first. Well, you'll see it first on the intraday charts, but you'll probably see it more clearly first on the daily chart. At the moment, we're in a little bit of a sideways pattern. We saw the Australian dollar do this over the last couple of weeks, and it has broken out to the upside again from there. On the pound here, we had a little pullback and then a weak run up and now a run down here, sort of going nowhere. We could be stuck here in a sideways formation before more upside, so just a little bit of consolidation. If we do break below that level, it's not the end of the world, but if we then go up and have a lower top there, or even a triple top there, we probably do have that pullback on the cards. And if it is going to be a pullback, there is a chance that's a pullback on the monthly chart. And for that to be a pullback on the monthly chart, it's got to break last month's low. So we'll keep an eye on that this week. I wouldn't be shorting here. The top is already up here. We're down a couple of hundred points from that top. But if we do manage to break through that low and then put in a lower top there, maybe that's something that I would consider there. If you are new to the channel and you haven't put two and two together from my name, Aussie Dollar Man, I am a fan of the Aussie dollar. That's my main market there. I think that's going up till the middle of May. So I do think that's got a little bit more upside in that. And the euro, the pound, and the Aussie dollar do tend to follow similar patterns. Although sometimes the volatility is a lot greater on one than the other, and the magnitude of the move is greater on the other as well. Looking at an interesting chart here, we had double bottoms with the 85 low, and obviously our 2022 low over here, just a mere 37 years apart. Since then, we've had a decent run up, but you can see that first initial impulse, it hasn't been able to repeat. And looking at the run down, you see the market stopped at these 75% milestones. This is a lesson from Gann's book, 45 Years in Wall Street. And if you haven't already picked it up, there's a lot of great stuff across all of Gann's work. So at some point, I would encourage you to read all of it. But this is a division of ranges that he makes in 45 Years in Wall Street. And you can see we've made a top on that 50% milestone on that big monthly range. And the current double top is sitting just on there. Now, I think that's going to go through. Okay, and if it does go through, that's a great sign that these double bottoms are going to hold. And there could be quite a good upside on the British pound and, of course, those other currencies against the US dollar. However, if we do stop at this level and start turning around, we may be going down to break that low. So as a trader, what do I do with that? I used to get really frustrated as a new trader when people would say, oh, the market could go up and it could go down as well. But, well, thanks a lot. How am I supposed to trade that? What am I supposed to do with that? Well, as a trader at the moment, I'm looking at all of my swings, going back to that reference point that I used earlier from Gann's book, The Wall Street Stock Selector. I've got all my swing timeframes lined up, so monthly, weekly, daily, 4-hour, etc. And on all of them, I'm looking at the trend. I'm looking for signs of strength and weakness, and that's called form reading. And at the moment on the pound, I don't think it's a great time to buy just yet. But after a bit of a pullback, if the pullback is weak, that may be an opportunity to buy. Or if we break through here and then come back and sit on that 50%, that could be a great place to buy as well. So it's just a matter of being prepared, being adult enough to realize that, yeah, this market could go up, it could go down. I've got my forecasts, I've got my theories there, but nobody, not even WD Gann, who I consider the greatest market forecaster, not even Gann was 100% accurate. He was still at his peak around 90%. And when you look at that time where he had 90% of his forecast correct, 92%, in that Ticker Investment Digest article, that was during a very, very bearish month, which Gann would have known of in advance due to the law of vibration. So a lot of his trades, I suspect, he hasn't told us, but I suspect they would have been bear trades, which is what you want to be taking during that time. So he had a lot going for him to get that 92%. which still means 1 in every 10 trades he was wrong. So don't focus on being perfect. Just focus on sharpening your axe, getting your forecasting as good as you can, but focus on your form reading skills because that's where your money is going to come from. Forecasting just gets you to the starting point, and from there you run form reading, and that's where you decide, am I going to get in? What's the reward to risk ratio on this trade? What are my odds? How far do I think this is going to go, etc., etc. Okay, moving on to the euro US dollar there. As we said last week, the euro has looked stronger than the Aussie and the pound. It's been a very, very strong run up here. We cleaned out a bunch of old tops. This is going back 2023, so about 2 years back there. We've cleaned out those tops, and obviously it's come back a little bit at the end of April. Friday's close, which was Friday the 2nd of May, is closing just above that old top there. You can see certainly from a monthly swing charting perspective, the market is a long way from its lows at 102, so it's 1,000 points away from there. That doesn't mean that you can't take long trades, but just be aware of where you are, especially if you're looking for a longer term trade there, that at some point it is going to have a pullback. The pattern here looks very similar to the British pound, except we have on the weekly chart had that little bit of a pullback here, about a 37.5% retracement. I've trained under many mentors over the years and bought most of the Gann courses that are out there. One that I did get plenty of value from, and I know some of you have studied as well, was Michael Jenkins. He runs a website, Stock Cycles Forecast. Big fan of Michael's work. He's got a lot of really good stuff there. One criticism that I would have there is that if you buy all of his courses, which of course I did, he's probably got hundreds, definitely over 100 applications of things that you can use, and you have to go away and test everything on there. It can be a little bit hard to pull together at times, but a lot of good stuff there, a lot of good trading techniques and information and advice there. One thing that I do like is that he said you wouldn't consider a move to be over, in this case, this upswing, this monthly upswing here, until you break a 50% point. So here on the weekly chart, this is the last weekly swing up. We've got a bit of a pullback here. As long as we don't break that 50% point, this move is still on and this move is still strong. So we haven't done that yet. If we were to break that 50% point there, then especially when you consider there's your last weekly swing down, which is pretty small, you'd be looking at overbalanced territory there. Then you can start thinking, oh, okay, maybe this monthly swing is over. But until that happens, I wouldn't be looking to take a short trade on this market. And again, you might ask, well, maybe the market's got to fall a long way before you realize that. But if you go and study enough charts, you'll realize it's okay if the market falls without you, because it nearly always runs up and gives you a lower top, what we call the retest. No one rings a bell and says, hey, the top is in. We have to work that out for ourselves. And sometimes we're wrong, but so is nearly everybody else in the market. So what happens is the market, if that's a top, and I don't think it is, but if it's a top, the market will have its big pullback and then it will rally into a lower top. And often that lower top is a lot easier to see and trade than the extreme top anyway. So you normally get at least 2 cracks at a big top there. I don't think that's it. Here, you've got a rundown on the daily chart. So this weekly swing that we've seen there, we've had a little rundown on the daily chart and a pullback. And then so far, that's a smaller swing down compared to that last swing down. That's a sign of weakness. And if we break that top there, well, that may be the end of that weekly pullback there. However, another thing that I look for is if a market on any time frame gives you 2 consecutive contracting ranges, that's generally the sign that that move is over, almost certainly over. Now, what do I mean by that? Here's a rundown. You've got a top there running down to a low here. Then you've had a pullback. This move here is smaller than the last one. And then if the next move is smaller than this one, so this is move 1, move 2 is smaller. If move 3 is smaller than move 2, that's 2 consecutive contracting downswings. Again, I've seen that work on any time frame just about. It's a very, very strong indicator. I'm not sure after 25 years of studying this stuff if I got that from someone else or if I invented it myself or recognized it myself, but that's one that you might like to keep an eye on and test out for yourself. Just doing a slightly deeper dive into the euro, if we break down this monthly swing that we've seen, and this again is how Gann set up his charts, so he had them running side by side. He had a lot of charts and he set them up in a lot of different ways. So I'm not saying he did this all the time, but this is the chart that he put in the Wall Street Stock Selector. And in my mind, it's the best way to have your chart set up, particularly if you're a swing trader. Have your swing charts side by side so you can see, here's my monthly swing, and it's made up of these smaller weekly swings here. So you look for signs of maybe a lower top on the weekly chart there. Yes, you got a little false move down there and that got broken. But generally speaking, if we then got a lower top here and ran down, that would be the end almost certainly of that monthly swing up there. Again, you can see that on the daily chart here. There's a daily lower top, and that signaled the end of this weekly run up here. And now I've got this weekly run down. So we check our daily chart. for signs of strength as to how far this weekly move may go down there. Personally, I think the euro's got a bit more upside in it, as I think the same for the pound and the Aussie dollar. But again, we wait and see, and we look for our trades accordingly. If you want to study form reading in more detail, check out Gann's book, How to Make Profits in Commodities, at wdgann.com, or where I learned it from, Safety in the Markets Active Trader Program online training. You can see that at safetyinthemarket.com.au. I don't get anything for mentioning those. It's not a recommendation as such. That's just my view on two places that you can go to learn this stuff that I believe you'll get value from, which I guess is a recommendation on some levels. Starting to sound like a politician. We've just had our election in Australia. Very underwhelming candidates from the major parties, but there you go. Last currency we're going to look at is the US dollar, Japanese yen. Last week we looked at this potential triple bottom formation. You can see we had a low there, a second low here, and a slightly higher bottom here. In my experience, if you're going to get a double or a triple bottom, the final bottom tends to, and it's just in my experience, I haven't done a thorough market research where you look at every single time it's happened on every single time frame and every single market. But in my experience, it tends to take out the previous low there. And what then happens is any stop loss orders or sell orders that were down here, they all get taken out. The market doesn't go anywhere. Everyone realizes, oh, market's broken there. It hasn't kicked on. It must be a false break. And the market shoots off to the upside. And then you get your triple bottom formation there. We haven't broken that yet. And this is part of the reason why I think that the pound and the euro and the Aussie still have a little bit more upside in them. Is that higher bottom here on the US dollar yen. Now, sometimes the US dollar yen goes a different way and a different magnitude to those other currencies. It can be a little bit of an outlier there in the FX world, but I would suggest that there's at least a little bit more downside to there. I don't think that's a triple bottom and we start running up heavily there. I still think that's a pretty decent top there. I've got a fair bit of downside to go on this market. As I mentioned in last week's episode of the Forex Form Guide, it wouldn't surprise me to see this market run down to that 75% milestone. So that's another couple of thousand, nearly 3,000 points potentially there if you got on trade there. The question, of course, is where do you get in? This monthly swing down is a fair bit larger than the last monthly swing down, which was this little outside bar here. So at some point, it is going to have a pullback there. If I was looking to trade this market, personally, I'd be looking for a pullback on the monthly swing, whether that happens now or whether it breaks through here and then has a pullback later. But I'd be looking for a pullback before trying to get set for a longer term position there. Now, you might be thinking, I can't take a long-term position here until we have a pullback. That's going to take 2 or 3 months, for example. But that doesn't mean you can't take trades. I'm saying if you're the kind of trader who wants to get set for months and months, well, you've got to wait for those bigger picture swings to complete their moves and then wait for them to have a bit of a pullback. And then you can start thinking about those bigger picture moves there. But you will always find moves. If you look across all of your swing chart timeframes, monthly, weekly, daily, 4 hour, 1 hour, 15 minute, 5 minute, 1 minute, etc., you're going to find these patterns and these swing chart formations at various times on various time frames. So the opportunities are there most weeks of the year. It's up to you how many time frames you want to follow and how close you want to get to the market there. At the moment, as I said, I think that even if we are going to go up, I think we've at least got to break that low there. Maybe we just drop below there, touch that 37.5% milestone, and then have a bit of a rally from there. We'll see what happens there. At the moment, we have had a run up and a pullback. And we've run up it's still a contracting range there. So we'll see what happens this week. If we fail there and start heading down, well, there's a contracting range there. However, because it has stopped at that level, if it then goes through there, Gann mentioned in the US Steel lesson, which is in the version of the Gann Commodities course that I have. I know there are a lot of different versions out there, but it was the US Steel lesson. And Gann said in there, tops and bottoms become halfway points in the market. So from this low here, we go to 100% of that last range there. If the market then pulls back and then goes through there, well, that top can act as a bit of a halfway point to the next point, which would be about 200% there. So that's something that I am keeping an eye on in this market here. We'll see on the daily chart what's happening there. Looks pretty strong on the 4-hour chart there. A little bit of a pullback there. We'll see what happens there. Probably on Monday, we'll have that question answered for us. In terms of the economic calendar this week, Thursday, the 8th of May, is shaping up to be a big one. This is actually Wednesday night, the 7th of May. But as I'm based in Sydney, 4 a.m. on the 8th of May, that's 4 a.m. Sydney time, we've got the Fed funds rate and the FOMC statement, and then at 4:30 a.m. the press conference. These are notable for potentially wild swings in the market, so something to keep an eye on. And then later that day, you've got the pound giving their monetary policy summary as well, and the official bank rate. And to top it off, you've got US unemployment claims at 10:30 p.m. So those are the biggest news announcements of the week ahead. For me, particularly on the Australian dollar, I'm more interested in the following week. which brings us to the middle of May. We'll have the RBA announcement for Australian interest rates. And as I mentioned earlier, and in my forecast date, that's where I'm looking for a medium-term top on the Australian dollar. Just a reminder that if you are on the Gann journey, I have recorded Gann's book, The Tunnel Through the Air, which I do recommend that all Gann traders read at some point, and probably more than once if you are looking to decode Gann's cycle work and trading systems. That's all for this week. I hope you got some value out of that. If you did, I'd encourage you to subscribe to the channel and watch these videos. And if you wouldn't mind leaving a like and a comment on the video as well. Forex Form Guide goes live at 7 p.m. every Sunday, and all of the previous editions are up there on a playlist on the channel as well if you want to check any of them out. I have hidden some nice Gann Easter eggs in some of those videos. I'll let you determine which ones those are. That's all for this week. Hope you enjoyed it. Until next Sunday, I'd like to wish you all the best with your trading. Have a lovely week ahead, and bye for now.